Hello students, welcome to TG Campus. We are going to discuss here about basics of accountancy as well as bookkeeping. So, first of all, here we have to understand from the practicality point of view. So, what is bookkeeping and what is accountancy? And why the bookkeeping as well as accountancy is very much important in your day-to-day life. Bookkeeping and accountancy is very much important for any person or any business or any organization they are engaged in trading activity. So we are going to cover here the basic concepts of bookkeeping and accountancy, which will help you to develop or strengthen your concepts regarding accountancy. So first of all, we have to understand what is bookkeeping. You might observe the sole trading concern organization, or I can say in simple sense, you might observe a grocery shop near to your house. That grocery shop owner, what he used to do? He used to maintain one red color register. The register that he used to maintain, what he do and what he record in that red color register? In that red color register, he used to record day-to-day business transactions. Sir, n number of transactions regarding purchase and sales are there, which are happening on a regular basis in his grocery shop. Similarly, on a monthly basis, he has to pay some expenses as well. There are two staff who are helping him in his day-to-day business. So he's going to pay salary to them. Then he have to pay electricity bill. He have to pay water charges, maintenance charges. If his shop is on rental basis, then he has to pay rent as well, right? So whatever transactions are there, whatever cash comes into the business and cash goes out of the business, he used to maintain one record in that red color register, right? He used to record day-wise, date-wise, each and every transaction of cash comes into the business and cash goes out of the business, right? And this maintaining and this recording is what? So it is nothing but the bookkeeping, right? So in more simple terms, I can say bookkeeping is nothing but systematic record of your day-to-day business transactions, right? So here, see, bookkeeping is an art as well as science. If you see here, what is bookkeeping? It's a bookkeeping is art as well as science. So why it is art? Why it is science? So because recording a transaction in a systematic way is an art, right? Whatever you are doing in a systematic way is always an art. And why it is science, sir? Because ultimately it's an arithmetical recording of your day-to-day business transactions, right? And what is ultimate aim, sir? So ultimate aim of recording this transaction is to understand whether your business is doing correct or not, right? Whether your business is doing correct performance, day-to-day business performance or not, right? So it's an art as well as science. It's a systematic recording, but obviously it's a systematic recording system classifying and summarizing of the financial transactions of the business. See, here what is important? So most importantly here is when we are talking about bookkeeping, we are going to record only financial transaction. So what is meaning of financial transaction? So when cash is involved, that transaction becomes a financial transaction, right? So in any transaction, if the cash is not involved, then we cannot say it's a financial transaction. It's a normal transaction, right? So in bookkeeping, we are going to record financial transaction. For example, if I went to some shop and if I purchase some goods, right? For example, I purchase 10 kg of sugar. So I need to pay in return, right? So this is a financial transaction. But suppose I purchase sugar and in return I pay, instead of making a payment in terms of cash, in return I gave away some goods, right? So that is not a financial transaction. That is known as barter exchange, right? So what we have to record? We have to record only a financial transaction. Then, sir, classifying and summarizing is very much important. Yes, sir. Classifying and summarizing means what? So if you are making a payment, then that payment is nothing but the cash payment. So whether it's a cash payment or a bank payment, whether you purchase some goods or sold out some goods on a credit basis, right? So the classification of that is very much important, right? So it will help you for a systematic record, and that systematic record will help you in a building of your entire picture of your business after the end of the year, whether you earn a profit or you suffered from losses, right? What is the position of your business at the end? So that we are going to know only with the help of bookkeeping. So next we have to understand here. So what is accountancy now? As we know, accountancy helps you to understand the financial performance as well as financial position of your business. So what is financial performance? What is financial position? I can give you example. Suppose you are studying in a 12th standard or in 11th standard. So your performance, your academic performance will determine by what? So your academic performance will determine by your score. How much marks you scored in your exam, that will determine whether your academic performance is average, below average, or best, right? Similarly, if I'm doing a business, if I'm running a business, if I'm running a grocery shop, so my performance is depend upon whether I earn a profit or I suffered from losses. So if my last year profit was 5 lakh rupees and in the current year I managed to attain a profit of rupees 6 lakhs, I can say there is a growth. But suppose by 5 lakh rupees was the profit of last year and in the current year I managed to attain only 3 lakh rupees of profit. So I will be saying, sir, it's not a growth, it's a declining, right? So what is important here, sir, in order to understand where I am standing at the present, what is my financial performance of my business? So for that, what we have to do, sir, we have to do accounting, right? Similarly, as the financial performance as well as financial position is also important. So what is financial position basically? So financial position is regarding your assets and liabilities, right? So asset means, so whatever properties that you are having of related to your business, a cash balance of your business, bank balance of your business, right? Whatever amount receivable from the outsiders, for example, you sold goods on a credit basis to 10 or 50 customers, right? You have to recover from them. So that becomes your asset, that becomes your property, right? So that those are the assets. And what are the liabilities? For example, for running this business, you have borrowed a loan from a bank, right? So you have to repay that loan. Suppose you purchase goods on a credit basis, right? So you have to pay to the suppliers regarding this purchase, right? So this asset and liability. So what are the balances of assets and liabilities at the end of the accounting year or end of the calendar year, you can say, that will help you to understand the financial position of your business, right? So bookkeeping and accountancy are interrelated. They are not separate, right? Bookkeeping is a primary stage, I can say. And what is accountancy? Accountancy is a secondary stage, right? But without bookkeeping, we cannot do the accountancy. I can give you a simple example. Suppose you are now accounts professional, right? You know every detail of accounting, and you can able to find out the financial performance as well as financial position of any business organization. That shop of grocery, that uncle is known to you, right? And that uncle is aware that you are studying accountancy and you are aware about the accountancy terminologies, right? One fine day, he call you and he ask you to find out whether he earn a profit or loss and what is the financial position of his business, right? And he handed over that red color register to you, right? So what you will be going to do? So after taking that red color register in your hand, you will be analyzing that, right? You will be doing what? So you will be analyzing. You will be going to analyze each and every details recorded by that shopkeeper uncle regarding cash comes into the business and cash goes out of the business, as well as whatever amount receivable into the business and whatever amount payable out of the business. So everything that goes through the year regarding that business, you are going to analyze, right? You will be going to understand. So what are the different transactions? And then you will be going to apply your concept, right? Apply your concept accountancy and you can find out, so what is financial performance of your business and financial position of the business. So now, by moving further, we have to understand now. So what are the basic accounting concepts which are important for finding whether that business earn a profit or suffered a loss, right? Similarly, what is the financial position of that business, whether they are having sufficient amount of asset or not, or whether their liabilities are more or not. So that we have to see in a further stage. Now we have to understand the basic difference between bookkeeping and accountancy. See, what is bookkeeping? A concern with recording and classifying of business transaction, right? I told you, I gave you example. So that shopkeeper uncle, the work of the shopkeeper uncle is to record day-to-day business transaction. So bookkeeping is concerned with recording and classifying of day-to-day business transaction. So then what is accountancy? Let with recording, classifying, summarizing, analyzing, and interpreting the financial data. So what does it mean? So I gave you example. That shopkeeper uncle handed over that red color register to you, right? So after getting that red color register in your hand, what you are going to do? You will be going to analyze. You will be going to analyze the financial transactions. So those transactions which are financial in nature, that you are going to interpret, right? So you will be going to interpret what is the cash transaction, what is credit transaction, what are the purchases, what are the sales, what are the different expenses, right? You will be going to analyze, you will be going to summarize that, right? Because ultimately you are going to apply your concept of accountancy, and you will be going to give an answer whether the business earn a profit or suffered from the losses, right? Second point, to maintain a systematic record of the financial activities and transactions chronologically. So why bookkeeping is important? So without bookkeeping, I cannot do the accountancy work. So first of all, I need to have a record. Without record, I cannot do the accountancy work. So bookkeeping helps me of having systematic chronological order of recording. So what is chronological order basically? So chronological order is nothing but recording of data in a systematic day by day wise, right? So that is nothing but bookkeeping, right? So what is accounting now? The report of financial strength and obtain the results of the operating activity of the business. So what does it mean? So what is operating activity of the business? So operating activity is nothing but operations, day-to-day business operations of the business, right? So day-to-day business operation of the business, whether that operations are conducted by the business or that owner smoothly or not. So that we have to understand. So that shopkeeper uncle, whether he efficiently handling his business or not, right? So that we have to give the answer for that. We have to give a report to them, right? And that report, preparation of that report is lies with the accounting work, right? So we have to prepare, sir, the financial reports. That is nothing but trading account, profit and loss account, and balance sheet, right? We are going to discuss in further, right? What is the different reports of the financial transaction, right? Then, so next point. In bookkeeping, in accordance with the accounting conventions and concepts. So, when you are doing a bookkeeping, when you are recording your day-to-day business transaction, you have to follow the accounting concepts, right? So, there are some accounting concepts that we have to follow while you are recording the day-to-day business transactions. For example, sir, there is a cash transaction, cash concept of recording business, right? There is a credit transaction or credit concept of recording a business. For example, if that shopkeeper uncle decided to maintain a record only on a cash basis, when it means he's going to record a business transaction only when cash comes into the business and cash goes out of the business. So that is a cash basis of transactions that here he is recording, right? And suppose he is using both the approaches. He is going to record cash transactions as well as the credit transactions. Then that is a separate concept, another concept, right? So bookkeeping is depend upon your concept of accounting, right? Then, so what is accounting? For interpreting and analyzing the financial reports can vary from the entity to another, right? So when you are doing accounting, so the process of accounting is same, but the reports generated by the accountant is different for the different businesses, right? So the financial performance of any business is not similar to another business. So it's depend upon size of their transactions, right? So in order to interpret the financial, I can say the data or to prepare financial reports, sir, the strength of the business or the different modes of the business that we have to interpret is there in the accountancy, right? And accountancy helps to interpret to prepare financial reports of n number of businesses, n number of size of business and strength of the business, right? That will help you but with the help of accountancy. Then to summarize the effect of the all financial transactions of the business for a given period. But obviously, sir, that shopkeeper owner uncle, he used to maintain that red color register, right? And what is the purpose of maintaining? He should have a summary of his day-to-day business transaction at the end of the month or at the end of the accounting period. So what is accountancy then? To interpret and analyze the financial information for the informed decisions. Sir, we know that when you are doing accounting, you are preparing what? So you are preparing a financial report. So that financial reports denotes your financial performance as well as financial position. As I said you, shopkeeper uncle, he attained a profit of rupees 5 lakhs in the previous year, right? And in the current year, suppose he attained a profit of rupees 7 lakhs. So there is a 2 lakh rupees of growth for his business, right? Now he will be thinking, he will be prepare a plan, schemes and policies for growth of a business or for the expansion of business, right? What are the steps that he is going to take, or he will be thinking like, so what are the necessary steps that I need to take now to increase a profit year by year? But suppose if it has happened like the last year profit of that shopkeeper uncle business was 10 lakhs. And now in the current year, he managed to earn only a 7 lakh rupees. It means there is a declining growth, sir. A growth get declines by rupees 3 lakhs. So in such a situation, he will analyze the mistakes done by him or what are the obstacles that he is facing, and he can frame a policies, he can frame rules and regulations and to overcome these challenges, right? So in short, the accountancy reports, or I can say the accountancy provides your financial reports, and that financial reports helps in decision making, right? So the accountancy not only helps a decision making of that shopkeeper uncle, right? Similarly, if I consider the example of a big MNC, multinational company. In multinational company, sir, there are n number of persons are involved in that multinational business, right? So there are employees, there are n number of stakeholders, I can say. Stakeholders means suppliers are there, customers are there, investors are there, right? So everyone's decision whether to invest into that business or not, whether to supply goods to that business or to that company on a credit period or not, is depend upon the financial position of that particular business, right? If the financial position and financial performance of the business is strong enough, right? So we can easily trust on the business. And if the position of the business is not strong, it's not good, then we are not going to invest into that business, or we can take I can take decision whether to invest or not by thinking, by analyzing everything, right? So that is the importance of the accounting, and accounting is not possible without the bookkeeping, right? So bookkeeping provide a primary source and accountancy is a secondary step which helps you to analyze the financial performance as well as financial position of your business. Now we have to understand the different types of accounts. So whatever accounts are there are divided into different categories, and there are two approaches for understanding the types of accounts. So first approach is your traditional approach and second approach is modern approach, right? So we are going to first understand, so what is traditional approach for getting to know, so what are the different types of accounts, right? So as per the traditional approach, whatever accounts are there are divided into three categories. That is personal account, real account, and nominal account. So in more simple terms, I can say the accounts which are segregated into three categories, personal, real, and nominal, are depend upon the characteristic of the accounts. For example, if I'm talking about personal account, so naturally I can say the any person's name, whether it's a natural person or artificial person, will fall under the personal account. For example, a capital account of the owner. So capital account is the account of owner. He invested money into the business, right? So that becomes a personal account. For example, it's a State Bank of India account, right? So that State Bank of India account is an artificial person. So that will be fall under the category of personal account. So any natural person who is naturally born or any artificial person like a company or hospital or a school, right? So are fall under the category of personal account. So for example, so artificial person's account, natural person account, and representative personal account is also there. So what is basically representative of personal account? So representative of personal account is nothing but, for example, sir, the datas are there. What is datas basically? For example, there are n number of customers in the business, right? We are dealing to the n number of customers on a regular basis with the business. And for example, there are 100 number of customers to whom I have made a transaction of selling of goods and services on a credit basis. So all those 100 customers collectively known as daters, right? And the dater is nothing but the representative of personal account. Similarly, so there are n number of suppliers who are supplying goods to me on a regular basis, right? So the whatever goods I have purchased from that n number of suppliers, and suppose I am purchasing goods on a credit basis, it means I have to make the payment to them in return after some period of time. So collectively, all those Suppliers is known as creditors, right? Is known as creditors. So the personal account, there is an artificial person, there is national person, as well as representative of personal account. So next category is a real account. So basically, what is a real account? Say any asset or any property of your business fall under the category of real account, right? So any kind of asset as well as property of your business will fall under the category of real account. For example, sir, you are having a cash at your business. So you're having a furniture, you're having a machines, you are having a AC, television, right? So whatever you are having in your organization, that property of your organization or your business is nothing but a real account, right? So the liability and assets of the company are fall under the category of real account. So similar to assets, so there are some liabilities. So that liabilities also fall under the category of real account only. So land account, then goodwill account, then patents account. So land, goodwill. Land is my real asset. Sir. Patent is nothing but I can say intangible assets. So patent means a patent or copyright. So I have invented something and that invention belongs to me. That is nothing but the patent, right? So copyrights. I have written something, right? I have written some storybook and that storybook is belongs to me. That storybook is from my intellectual, my thinking. I have developed a story, right? So the right of that storybook belongs to me and that will fall under the category of real account. Then next is your nominal account basically. So what is nominal account? Sir, when you are doing a business, there are n number of income as well as n number of expenses, right? Income and expenses, so recording of income and recording of expenses that we have to do, right? That we studied in a bookkeeping as well, right? So the segregation of those transactions into the income and expenses, losses and gains will fall under the category of nominal account. So if you are doing a business, you are purchasing goods, you are selling goods, right? So purchase becomes your expenses, selling becomes your income, right? Payment of rent, payment of electricity bill, right? Receipt of commission, receipt of interest, right? All are nothing but your income and expenses will fall under the category of nominal account, right? So for example, salary account is there, interest is there, and rent account is there, so are fall under the category of nominal account. So this is the traditional approach, which is segregated into three: a personal account, real account, and nominal account. So as per the modern approach, now we have to see, right? So according to the modern approach, so whatever accounts are there are segregated, are divided into these categories. So first is your asset, second is your liability, third is your expenses, fourth one is your income, and fifth but not the least is your capital. So what are the assets? So we already studied, we already know. What are the assets? So assets is nothing but the property of your business. So any property of your business fall under the category of assets, right? Then, so what is liabilities? So anything payable out of the business, anything payable out of the business is your liability. Suppose you borrow a loan from a bank. So that bank loan you have to repay. Suppose you purchase goods on a credit basis from XYZ company, right? In return, you have to pay them. So whatever payable is their liability, right? Then what is expenses? So when you are doing a business, you have to pay electricity bill, you have to pay water charges, you have to pay stationery, right? So all are nothing but your expenses, right? Then income, sir. So after selling, for example, suppose I'm doing a business of manufacturing of this pen. So after manufacturing of this pen, what I will be going to do? So I will be going to sell this pen into the market. So after selling this pen in a market, whatever money I have received is my income, right? That will fall under the category of income. So next is capital. So what is capital? So capital is nothing but the owner's investment. When owner started a business at the initial stage, he put his investment into the business, right? He put his amount or savings into the business, and that is known as capital, right? So these are the types of accounts as per the traditional approach as well as modern approach. The next concept that we will discuss here is regarding golden rules of accounting. As we know, whatever accounts are there are divided into two broad categories, that is as per the traditional approach and as per the modern approach. So as per the traditional approach, whatever accounts are there are divided into three categories: personal account, real account, and nominal account. And whenever any account falls under the category of personal account or real account or nominal account, so there are rules, and those rules are known as golden rules of accounting. So with the help of this rule, we can understand which account to debit and which account to credit. Sir, in accounts, we know if one is debit, there has to be a credit, right? So with the help of these golden rules of accounting, we can able to understand, so which account to debit and which account to credit. So suppose, for example, personal account. So we know in personal account, there are natural persons, there are artificial persons, there are representatives of personal, right? So whenever any personal accounts is involved, then which rule is to follow? So rule is debit the receiver and credit the giver. So this rule we have to follow in the case of personal account, debit the receiver and credit the giver. Then, so when we move to the real account, so we know under real account, there are assets covered, right? Whatever assets and properties of business are there, so that fall under the category of real account. So when we talk about the real account, so what is the rule of real account? Golden rule of real account. So golden rule of real account is debit what comes in and credit what goes out. So whatever comes into the business, so for example, cash. So cash is an asset, property of the business. If cash is coming into the business, then we have to debit the cash, right? Debit what comes in and so credit what goes out. And suppose if cash is going out of the business, you purchase something and you paid a cash. So cash is going out of the business. So we have to credit the cash account because cash is going out of the business. So simple rule, debit what comes in and credit what goes out. Then, so next is a nominal account. So we know under nominal account, there are expenses and losses, incomes and gains. Expenses, losses, incomes and gains fall under the category of nominal account. So what is the rule of nominal account here? So rule of nominal account is debit all expenses and losses and credit all incomes and gains. So whatever expenses and losses are there related to your business, so that we have to debit. For example, you paid electricity bill. So electricity is your expenses. So that electricity account we have to debit, right? Electricity account we have to debit. So debit all expenses and losses. And then, so credit all incomes and gains. Suppose you received interest from bank. So that interest is your income. So that interest you will be going to credit because the nominal account rule says debit all expenses and losses and credit all incomes and gains.